Stock market is selling off today. This is spiking up the VIX. I'm actually taking the opposite direction because I think this is overblown. Comments from the Federal Reserve that they're likely to raise interest rates one more time this year and leave interest rates higher for longer is catching professionals off guard. That's shocking. Nonetheless, I've got a slew of charts, including put-call ratio charts, where you can look at the put and the call ratios for the VIX and the S&P 500 to get an idea as to what's happening with options. And because of that, I see the VIX coming right back down. UVXY is the stock I'm going to be trading. UVXY stock is an ETF that tracks the VIX itself. I'm buying puts on this, thinking that we're going to relax into this, and we'll probably see a decent little calming effect as the market absorbs the shock and awe of higher interest rates. Let's jump in. Got a ton of charts for you. First off, thanks for stopping by this particular channel. I actually have my original channel, Cannabis Stocks Analysis, which I renamed, and I'm breaking out the content into three. This is stock market and stock options analysis. Thanks so much for following along, hitting that like and follow button, and boosting this channel. The metrics so far in the few videos I've put out have been really impressive. Given that, I also have a third channel, Tech Stock Analysis. Make sure you follow the link. YouTube's not been exactly awesome with letting me have clickable links in the description below. Thanks for copying and pasting and getting that all done. Really appreciate it. It'll help the metrics on the channel and push forward. Let's talk about the VIX, specifically UVXY stock, and what I plan on doing with UVXY stock. I am looking to get in on a short put position for UVXY stock because I think this is all overblown. Cleveland Fed President Mester, I suspect we may need to raise the Fed funds rate once more this year and hold there for some time as we accumulate more information on economic developments. JP Morgan Asset Management warned that there's a risk of further stock market declines due to rising interest rates, saying we have not anticipated such an increase in rates. Are you effing kidding me? How much you getting paid for that, bestie? These asset managers take 2% of your total assets under management, then 20% of your what is earned. That adds up. You didn't see this coming? I mean, I would think that one of the biggest investment banking companies on the planet would have seen this coming. And here's where I get my information. The Federal Reserve has said we will leave interest rates higher for longer. And more than likely, we have to raise interest rates one more time. Yet a comment from last night shocked the market and tumbled everything. That's what's shocking to me. Anyways, here's a look at the S&P 500 VIX itself. All right, you can see that it's shot up pretty nicely right now, but I think we're probably kind of overblown at this point. Here's a bigger look, although that last chart kind of looks menacing. When you look at the perspective of everything, it's not. All right, so I have a bunch of charts in here, put-call ratios. I'm going to be talking about that heavily because that's something that's really important. And here's one right here. This is a put-call ratio on the VIX itself. What is a put-call ratio? I have this put-call ratio on the VIX, not on UVXY, but they're interchangeable. You can find put-call ratios on, say, SPY chart and other places. SPY stock chart and other places. So the put-call ratio basically looks at the number of people who are buying puts versus the number of people who are buying calls. So if you look at your put call ratio on the S&P 500, typically it's about 0.8. All right, that means for every one call you get, or 10 calls, you get 8 puts purchased. Right now we're pushing 1.05, so that's about 0.25 higher, 0.23, somewhere in that range, higher than normal. As the stock market fell, people rushed in and purchased puts. at the same time, this chart here, the put call ratio, this is showing that with that transition, people are starting to buy calls on the VIX because the VIX is spiking. So you can kind of look at the two together when you do look at these, and this is important to kind of conceptualize. And this is the culprit right here. Interest rates are clearly going higher. This is the 10-year yield, yielding at 4.77. The 20-year is a little higher. So either the 20-year goes down or the 10-year keeps going higher. Then the 30-year is a little lower, sort of like a bump in the road, I guess. But they will likely even out over time. And it's just a matter of supply and demand on any one particular day, but over the course of a period of time, they do kind of work their way out. So one of the reasons why the stock market is falling is, as an investor, I can get 4.77% out of the United States Treasury yields. But if you look at, say, the NASDAQ or the S&P 500, maybe I only get 1.5 to 2.5% out of the S&P 500 when you look at earnings over top of price, the PE ratio. Because of that, I get more money out of the 10-year. So I will sell my stocks in exchange for treasuries. That's one of the reasons why the stock market is adjusting. As interest rates adjust higher, more stocks will sell off, especially the ones with the lowest amount of yield or least amount of consistency. When you can kind of start comparing those two and understanding that concept, you see how this all happens. So here's a look at the S&P 500 from this morning. Here's a bigger look. In December 2022, I came out and I said, stock market 2023, this is my expectation that we slowly churn higher and higher and higher throughout 2023. Very quiet in the summer, then sell off in the fall. All through September, now into October, we have been selling off. So my December 2022 video on stock market 2023 is playing out exactly as I expected, that inflation would not get to where it's going, and therefore interest rates are going to remain higher and continue to move higher for longer. Sadly, I expect the same thing in 2024 as well, although I'm not formalizing my prediction for 2024 just yet. But I think we're lower in December than we are here today. So far, I've been hitting that one perfectly. So cautionary tale to you on that one, but it's an opportunity to make money if you think of it that way. Here's a look at the put call ratio on the S&P 500. All right. So the VIX, UVXY stock have spiked up. People were buying calls. You saw that on the put call ratio there. That normally people were buying puts at a ratio of about, it was like about 1.05 to calls. When you see this chart here, which typically over the past couple weeks has been about 0.95, there's been some, you can see it went as low as about 0.6 on average. That's an average. We clearly went below that. But as these stocks shifted lower, people rushed in and bought puts. They're either betting that the market goes lower or protecting their positions as a hedge by buying these puts. It's an insurance policy. And when you're one of the JP Morgan asset managers who gets caught with their shorts around their ankles regularly, you need to buy those insurance policies as often as you possibly can, because they clearly couldn't see this coming, even though everybody else saw this coming. So they've driven up the number of puts being purchased versus calls. Normally, for every 10 calls purchased, there's perhaps 0.7 puts. So that's your ratio, puts to calls, set 0.7 to 10, 0.7 to 1. So as investors rush in on these puts, UVXY stock shoots higher. The put call ratio there skews higher on calls. but all this mellows back down to normal. So when you're looking at the put-call ratio for the S&P 500 and you're looking at the put-call ratio on the VIX, you'll see that there's a correlation between the two. That as the stock market falls, puts get shot up higher on the on this chart, the S&P 500, and calls get skewed higher on UVXY or the VIX, whatever it might be. So my trade on this is simply to buy puts because the valuation of these calls right now are skewed too high. The puts on the S&P 500 are skewed too high as well. Everything's going to calm down. I'm looking to get in about $17.50 to $17 on, this is UVXY stock, and I want to buy some maybe 10 days out. I don't like holding the VIX too long, because, especially UVXY stock or any of the other ETFs in this, because they go off the front 1 and 2 months and there's inflation and interest involved, carry, if you will. That carry cost continuously erodes UVXY stock as well. Those guys are taking money out of there. So they're continuously reducing the value of the stock itself versus the VIX. They got to make their buck. So if I can get in at, say, 25 cents or 50 cents, something kind of small, I'm probably only looking at most, or at least, say, a 20% move. So if I bought in a put at 25 cents, either 17.50, 17, or 16.50 over the course of the next exercising in 10 days out, I'll be looking for about a 20% move higher in the puts. Should I hit that, I'll probably get out pretty quick. I don't think we're going to see any new news coming in that kind of scares the market too much. Friday, of course, we do have employment numbers, which will probably solidify everything that I've been saying. Might catch JP Morgan Asset Management off guard, of course. The economy is firm. That is both good and bad news. If it's too firm, from an employment standpoint, interest rates are going to remain higher for longer. But what if it shifts gears and starts to slow down just a little bit? You'll probably get a nice little rally out of the S&P 500. And from there, those options, my puts on the UVXY stock, will likely fall. So that's kind of my strategy with this particular move right here. I look for outlier moves like this, then I get in and usually take the opposite because I realize that the market itself is overblown. This particular channel will deal with stock market and stock options analysis. Make sure you click that like and follow down below. There are my other 2 channels down there if you're finding this from other resources for my YouTube channels. Like I said, I broke it out. I've got the cannabis stocks, of course. This one, stock market and stock options analysis. Then tech stock analysis as well. Just launched those channels over the weekend. The numbers have been fantastic with my click-through rate. Thank you so much for that. Appreciate all the metrics. See you in the next video. Make sure you hit the like and follow button. And best luck with you on this trade. Look for UVXY stock to move lower. We'll see you in the next video.